let's start actually with the BOJ and your expectations. So you suggested there, no, you don't expect there to be any big change, although we've talked in the past about how even Governor Ueda, or specifically Governor Ueda, has talked about the value of surprise in markets. Why is it then, given the inflation picture that you set out there, why is there an expectation that things won't change this time around?
And I am wavering so much on this issue. Just this morning, I fell down a rabbit hole of conspiracy theories that he would have to change this Friday because he has to do it when it might be premature. It'll be just too much damage for markets if he waits till it's a no-brainer, if he waits till it's certain that inflation is kind of sustainably above target and potentially out of control. However, after falling down that rabbit hole, I was rescued by some of my colleagues who dragged me back up and made the point that his comments this morning in his first meeting would undermine his credibility too much if he did change. He was very, very clear and explicit that Japan still needs very easy policy, that it specifically needs easy policy that comes through yield curve control. So I think he will not move yet, but I do think that at some point later this year, the potential for a surprise is available. Now, the one extra context is that one of my colleagues, Simon Flint, has kind of made the point very well that we in markets are obsessed by how markets are pricing around this. But ultimately, central bankers really just care in their simple mandate. That is controlling inflation while not doing too much damage to the economy. And therefore, maybe I should stop getting too much focus about when markets are pressuring the central bank or not.
OK, yes, we're making too much of it about markets, perhaps then, Mark. Let me ask you about China and your expectation. You've always been, well, not always, but recently you've been really positive on China. I know one of our colleagues flagging that geopolitical concerns is keeping some global investors on the sidelines and stopping them, especially ahead of a US election in years to come, keeping them from being more positive on China stocks.
Yeah, I just got asked by a viewer this morning, do I still believe in the China kind of reopening story, bullish story? And I absolutely do. So a few things, though, qualifiers and a few evolutions at thinking. So first of all, I think that the Chinese economic recovery from last year has gone exceptionally well compared to where we were thinking a few months ago. This is not some super cycle story like in the mid-2000s, but it is a stronger growth story than we're seeing in much of the West. And I think that is sustainable and will last. Now, what are the two evolutions? I think, first of all, you don't necessarily play this through Hong Kong tech. That's really important. That's a different policy story. It might also work, but it's not the China recovery story. It's also not Chinese mainland stocks. It is more the other stocks within the Hong Kong that probably play this the best, or the second derivative trades. The other thing to draw attention to is, as you mentioned, Anna, is the idea that people are really, really struggling to get on board because those geopolitical concerns are very, very valid, particularly for US investors. I had a friend who was at a conference only this week, and there was a panel of Chinese experts who were just being super hawkish and saying they really think the chance of military escalation between the US and China is real and valid and is deterring them this year. And I think to get over that narrative for US investors is going to be much harder than I previously thought. So I think the story is going to be slower to play out, more painful, but it will be an unloved rally that will work.